Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Wednesday, June the 9th, 2010, and the world markets closed in split fashion again. This time with the Asia was up. Let's see what we got here. Yes, Hang Seng was up, Euro was up, and the U.S. closed down with the Dow Jones Industrial Average off by 40 points, the Nasdaq off 11 points, and the S&P off 6 points. Let's have a look at the charts and see what's going on out there. Now we already know what's going on out there. We've been telling you, be short, be a bear for a while here. You can see where we started recommending this market be shorted, and we believe that's supposed to continue. Back here, I believe it was on this chart. If it wasn't this one, it was on the Nasdaq. We had the inverted hammer, the same thing we got today. You'll see these here, 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 and today again. All right. Um, Now, I know that some of these don't look like inverted hammers to some of you guys, but for us they are. And I told you guys back here when this happens and you have an inverted hammer, typically they want to short them on these situations where they've run up a good bit and then they show up and they want to start shorting because they know a pullback is inevitable or a sell-off is inevitable, and they get their gain that way. They're a little more skittish to short them here because the market can then move against the call, put them under pressure, like you did back here. So we told you that here. If you shorted here, you could see a little move to the upside before she actually broke down anyway. This is the same exact setup. Okay, she broke down anyway. Now we've got this one here again telling us that we can short here, and there is potential for a move up here before she goes lower, but she will end up going lower. Now, there's a lot to cover here, so look at this. The odds of her bouncing higher at this point are better than the previous case here simply because the volume level is different. Okay, you have the volume here. Let's get the tool I can use that clearly defines this. There we go. Let me see. There you go. You can see where they line up. All right, today's candlestick right here and the volume right here. The last time we were here and volume was a little bit bigger on the sell side. Okay, so there is that. I don't care. Any way, shape, or form, I would short it, and I would short any bounce. What you're going to do is you're going to go out and look for a stock. Well, we're going to give you one, an ETF today, but we're going to show you where your sweet spot for a bear, like we said last night, is at the middle Bollinger Band line. The middle Bollinger Band line is the green dotted line on all of our charts, and we'll show you on tonight's alert. The best opportunities are going to be sitting at that point already. Okay, so they don't have a lot of upside potential right there. They're going to kind of churn, so you definitely want to use that in your favor, and I'm going to show you why. When you're shorting here, you're afraid of two things, and you shouldn't fear them. You should just know that they're out there. Number one, there's three different ways this market can play out. First off, she could do this number, move sideways, and then drop off a cliff. Okay. The next thing she could do is actually bounce up here and fail, and then drop off a cliff. Or she could run all the way up here and test this previous high right here. All right. At that time, she would fail and then fall off a cliff. In every case, she falls off the cliff. Okay. Now, I think that's the most unlikely is a run way back up here. Okay, that's in my opinion the most. The odds are not in favor of that. Um, the second call would be the move. Wrong tool. Would be the move up to here, and then a little play around here at this level for a bit, and then roll over and fall down. That would form the head and shoulders pattern everybody talks about. We've talked about it before back when we first fell down here. It was possible to see that develop. It hasn't happened yet, and we've got some reasons to not anticipate that. So let's look at this right quick. Basically, you've got the first shoulder, the head, and then potential for a second shoulder in that case scenario. Okay, you've already seen that before. If you look closely at this point here, you've got shoulder, a head, and a shoulder. Okay, just think of it like a silhouette of a bust and head. Okay, very simple. All right, so that's a possible case scenario right here as well. Then there's a third case scenario, and I believe it to be the most likely, and I believe that is sideways activity for a short period of time. We're talking maybe a week or two, maybe, and then we could just go lower. Okay, it could happen now. I mean, I'm not that good at timing this thing, so uh, I would just say, be shorting now, and any move higher, be short as well. And let me show you why I've come to that conclusion. Throughout this crash, we've been telling you that this market looks an awful lot like the 1930s crash, and you had 1929 sell-off, same way we fell and same fundamental reasons we fell um, in 2008, then a substantial bounce that peaked in April of 1930 and began to roll over because of the Europe debt crisis of that time, which I believe it was Germany that defaulted on their debt, and down she started to go. We're right here at this stage right now, okay? Right there, all right? So the question is, are we going to bounce up like they did a little bit here, or is this more of a flat trending pattern before she goes lower? In either case, she goes much lower and really fast, okay? You don't want to miss that. Plain and simple, you don't want to miss that. Where you're going to find your real bounce at, and what people keep asking me is, where's the bottom? Where's the bottom? The answer to that question, in my opinion, is going to be right there at the previous test of this low, okay? Now we're looking at an old chart here, so let's go back at our current chart and get an idea what I'm looking at. Okay, this is the long-term picture of the Dow Jones Industrial Average. It's a 4-year chart. Each one of these candlesticks is a week. You've got the sell-off of '08, looks a lot like the 1929 crash. Then the bounce that happened in 1930, the rollover period in April, and that beginning sell-off right here. And now you're at that point where you could already be the flatlining before you're either going to do this number up here to the middle Bollinger Band line and then down substantially to this level to test this low about the 7,500 area for the Dow, and you'll either have that case or it'll just move sideways. Let me get those out of the way. Or she'll just move sideways and for a very short period of time like we did on that 1930s chart, and then just boom, okay? I believe down here you'd find more support because people are looking, right now they're trying to deny, oh, there's not going to be a double dip. There's going to be a double dip, plain and simple. What's going to happen when they get down there, then you're going to have people saying, okay, this is the true bottom. Well, according to the 1930s chart, it wasn't. So I'm not going to say it is the true bottom or it's not. I'm just going to say we are going to come down here, then we're going to see a bounce. So at that point, once you've fallen down here, it'd make more sense to me to actually cover shorts, and then start trying to play the long side. And if she starts to develop bearish signals, something like that we're going to, fall lower again, we'll spot that and we'll, turn around and go the other way with it. But for now, every signal we're looking at, including today's, let's have a look at it again. Like I said, every signal we're seeing right now is showing more sell side. You shouldn't see inverted hammers down here like this if the sell pressure was alleviated by this pullback. That's the reason for a pullback. You pull back, you alleviate the sell pressure, find support from the buy pressure, and then you go higher. You should have good strong candlesticks, and you're not getting that at all. What you used to have was this case, nice hammer formation, then good candlesticks, hammer formation, good candlesticks, hammer formation. That's not what you're getting here. You're getting sell signals still here. That tells you to short here, short now. There's still a lot of sell pressure at this level. That's what I'd be doing, plain and simple. If you haven't been to our free website at perfectstockalert.com, it's, like I said, 100% free, and we're not talking internet free. It's free, okay? It's awesome. All we ask in return is you refer a friend. Tell somebody, anybody, to go check out perfectstockalert.com. They're absolutely awesome. Been calling this thing like nobody's business. Look at all that. Oh, yeah, that's right there. You know what that is? Yeah, that's money. Plain and simple. Oh, there's a long side one too. Ah, awesome. Let's look at our disclaimer. The disclaimer. Read it. God bless. Enjoy the evening. Stay short. We've got an ETF alert coming out to you tonight, so check that out. And as always, subscribe to our YouTube channel or I'll hit you with a stick.